back in? Or just leave the room back in? Try refreshing your screen as well, I would say. Hi, Donna. How are you doing? It's good to see you. I just saw you earlier for Tiffany's room as well. But to answer your question, sorry, Aislinn. Try refreshing your screen as well. I know that has helped me whenever I'm having connectivity issues. I also have a few different like segments of Wi-Fi that I can transfer in between. So just turning it off and turning it back on can also help as well. Hi, Michelle. How are you doing?
I'm good, thanks. How are you?
I'm good. I'm good. Thank you so much for joining today's session.
Thank you. Thank you for having me.
Of course, of course. So thank you all for coming today. We're going to be talking about FHA loans, why the heck they even matter in today's market. And so we have Joe here. And so he is our resident mortgage expert. So if you have any questions about anything he talks about today, feel free to just unmute yourself and ask away. Otherwise, Joe, thank you so much for joining us today. I will hand over the microphone to you.
Thanks, Leah. Hi, everyone. Just to introduce myself, my name is Joe Flannery. I've been tasked to lead the LoanDesk team here at Radius. I hear a lot of background noise. Leah, would you be able to mute? Yes. Michelle, you might have your microphone on.
Michelle, are you able to unmute?
I'm muted. Can you hear me?
Yes, I can hear you.
Oh, so I'm not muted. Okay.
There we go. And then...
Okay.
Sorry about that. I thought it was muted.
No worries. No worries.
So, yeah, I've been tasked to lead the mortgage division here at Radius. And are you able to, Leah, to mute guests who are not the hosts, or is that
as the host, you'll be able to do that?
Okay, all right. And just wanted to go over FHA loans and why they're making a comeback. So, did anyone attend the room that I hosted about using mortgage in marketing? So, the reason why I think this is really important is because as a real estate agent, part of, I feel like, the value that we deliver to our clients is educational content about what's going on in the industry, whether that means mortgage products or home buying statistics or properties or things to look for. You're kind of like really the center for the transaction. You're the quarterback. And so the more knowledgeable that you are about different programs, I think the more educated content you'll be able to share with your clients. And so one of the things I wanted to cover is FHA loans have ticked up in origination. About myself, I had a lot of experience with FHA loans. So in 2016, I was actually the #9 originator of FHA loans in the entire country. And then in 2017, I was also in the top 100 FHA loans. So really, FHA loans was my bread and butter. This is what I did. Then they went out of style. And so what brought them back is really it has to do with mortgage insurance premium. So let me see if I can share screen here and share screen. And
we'll pop up momentarily. Just give it a second.
No problem.
There we go.
In February of this year, it was announced that there'd be a 30 basis point reduction in FHA mortgage insurance premiums, making FHA loans more affordable. To me, this kind of really fell under the radar because if you polled a lot of people, if you asked a lot of people, they were unaware that FHA loans had lower mortgage insurance. So there's basically, when you talk to first-time home buyers, which is predominantly what FHA goes after, there's really this idea of, okay, I don't want to have mortgage insurance, right? This mortgage insurance is bad. And essentially that's good, but I may not have 20% down payment. So what's important about FHA now is it used to be like, hey, if they can qualify for a conventional loan, then now you can, you don't want to do FHA because it has mortgage insurance for the life of the loan, assuming they're putting less than 10% down, which is most cases for an FHA loan. Does anyone know the minimum down payment on an FHA loan?
3.5.
Yeah, so 3.5%. So now with the mortgage insurance dropping, it's all of a sudden FHA and conventional becomes a lot more competitive. So I pulled up FHA mortgage limits here for Los Angeles County, and you may be surprised to see that you can actually buy a $1 million home with an FHA loan in Los Angeles County. You can buy a $2 million, get a $2 million mortgage on a 4-unit in LA County. And I know what you're thinking, like, oh, this is unlikely. But in fact, actually, this really fits into in my opinion, millennial home buying trends. I have worked now with this year on more multifamily applications than I had in the previous 3 years combined. And I think a lot of it is this idea of, okay, I want to buy a home, but I don't want it to be, I want it also to be an investment. And so for a younger person who's maybe, doing well income-wise, but not set up asset-wise, they're really surprised to learn that, hey, I could actually buy this 4-unit property with such a small down payment. And under FHA, you can use the anticipated rental income to go towards the monthly mortgage payment, enabling folks to be able to qualify. And so let's just kind of run through the numbers here. So I'm going to just run through a scenario here. And we have different programs. So we're going to do an FHA versus a conventional program. So let's say it's a 680 credit score. Let's say the person makes $10,000 a month. And we'll just put monthly debt for 0 for now. And we'll do LA County. Oops, is that not LA County? Okay. And we'll do a conventional option, which is probably what most people are thinking. And if you go to a bank, let's say it's a $500,000 purchase price, and let's just say they're putting 5% down. So $25K, and we'll say it's a first-time home buyer, underserved area, no. And Michelle, if you don't mind muting your microphone, that would be appreciated. And we'll say client paid PMI.
Joe, really quick, it's still showing that she's unmuted as the host. Can you click on the 3 dots next to her name and have her and move her to a listener? That may help offset some of this background noise that we're hearing. So sorry about that.
Yeah, because I hit mute and then it goes, I just watched it and it automatically goes back to unmute.
Don't worry about it. Don't worry about it.
Yeah, no problem. I'll play through. Okay, so this is gonna be a conventional loan, and we're gonna just check out what the monthly payment is. 680 credit score. Everyone following me? Single family home. I know that's unrealistic for maybe Los Angeles, but let's just see what we get here. So we're gonna do 30-year fix, conventional, and then we'll pick the rate that is basically closest to par pricing. So par meaning they're not paying any points or paying very little points, but they're also not getting a letter of credit. So in this case, it's going to be 7.75. So conventional, we got 7.75 is the rate. And then the PMI is $229 a month. So we got the total payment is $3,632.5. All right. Now let's go back and we'll run it as an FHA, and we'll see what we got. So here, the closest par pricing is actually 7.375, and you can see here that the PMI is actually the mortgage insurance. So PMI is for conventional, mortgage insurance premium is for FHA, that is actually less than for the conventional. So you have a 7.375 and you have a $197 mortgage insurance. So your payment here is $3,535. So the payment is almost $100 less per month. Now, for many borrowers, they're just conditioned, no FHA, no FHA. But in this case, this borrower actually has a lower monthly payment by $100 under FHA. And so this is really a valuable lesson to know, because when you have a client, often the loan officer is immediately thinking conventional. That's all they want to go for. It's like basically like, especially if it's a bank, like they're just going to think conventional. But sometimes like if it's kind of a mid-tier credit score, then actually FHA could be more a lower payment. And for most clients, and I've worked with hundreds of first-time home buyers, often what they're really focused on at the end of the day is the monthly payment that they're going to have after the transaction is complete. So once the transaction is complete, then they want to know how much they're going to pay each month. And so if they can pay $100 less, they may be willing to take actually the FHA loan, which does have some negative consequences as far as like the mortgage insurance staying on for the life of the loan. But most likely, given where we are in the rate cycle, very good chance they end up refinancing this mortgage in 3 to 4 years, irrespective of with the mortgage insurance dropping off. So this is something that's almost like news to me, because like when conventional was, when we have a client, we're always thinking, oh, put them into conventional. And now this year, we're doing a lot of FHA. And FHA is really it enables folks to qualify at a lower monthly payment and at a higher DTI. So this person would be able to qualify for more of a house under FHA than under conventional. And so you can just keep kind of running scenarios. So, if you go even lower, let's say, so the minimum credit score under Fannie Mae and Freddie Mac is 620. So let's see what we get if we put 620 under conventional, and then you'll see how much it makes sense then to go FHA in this case.
Michelle, if you'd like to try refreshing your page, that may help with the muting and the unmuting. I'm not sure why this background noise is still coming, but if you want to refresh your screen, that could possibly help.
My screen showed me that my speaker or my microphone was muted. I had to unmute to talk to you.
I understand. It might just be a bug with the platform. So if you don't mind, just try refreshing your screen, and that usually resolves a lot of the feedback.
Okay, so we have a 620 credit score. So now we're getting 7.99 with a $455 mortgage insurance. So the payment here for this 620 credit score, so 39.
Interrupt real quick. Did that work?
Yeah, that worked.
It said it had me in 2 rooms, so I think that's what was causing the problem.
Oh, I see. Perfect. Well, problem solved. Sorry about that. Anyway, sorry, Joseph. Please continue.
That's okay. All right. So everyone follow me. So this is a conventional loan. They're putting 5% down, 620 credit score. Now let's run it under FHA, and let's see what the payment is. So now you can see actually this borrower is getting a lower rate. So that borrower is paying 2 points. So the equivalent rate is actually a full 1% lower, because this, if you're comparing apples to apples with the closing costs, plus the the mortgage insurance with FHA is $197. And you'll notice that the mortgage insurance on FHA is the same for a 620 applicant versus a 680 applicant. And this is really what makes FHA attractive for average credit scores. Basically, it doesn't matter what your credit score is. If it's a 500 credit score or if it's an 800 credit score, with FHA, you get the same mortgage insurance premium, which as of February 22nd is now lower. Whereas if you are a conventional borrower and you have a 620 credit score versus an 800 credit score, the mortgage insurance premiums widely differ. So in this case, by going FHA for this client, comparing apples to apples on the discount points on the origination costs, the monthly payment is, so 3409, so it's $500 less going FHA per month relative to going conventional. Huge savings for this client. So if you have a client who's in a lower credit score, 620 credit score, 620 to 680, look at FHA. And then you even may want to look at it if we go higher. So as the credit score goes up, then the whether or not it makes sense to go FHA versus conventional, it gets more compact. And eventually, if you get like a really high credit score, let's say you have someone who has an 800 credit score, you'll see it's actually better to go with a conventional loan. And so this is just an opportunity to really market to folks who feel like, oh, first-time home buyers, they maybe have some credit blemishes, but they're actually getting like a low rate and a low mortgage insurance because it's subsidized basically by the government with FHA. So in this case, if we look at the conforming loan of a 780 credit score, we have 7.875, and then the PMI on this is dirt cheap. It's only $75 a month. Whereas if we look at the same scenario with FHA, we know the PMI is going to be $197 a month. So the PMI or the mortgage insurance on FHA is $120. So this is just really important to know that mortgage insurance doesn't change based on the credit score with FHA, but it does change with conventional loans. So you have a 700 credit score. Now we have like now it's more of a decision. Okay, which one would be best? We have 30-year fixed, Fannie Mae. Okay, so here we can look and see the PMI is $178 a month. So the PMI is a little bit less than FHA, not by much, about $20 less. But then in FHA, you have lower interest rates. So even at a 700 credit score, this borrower actually may have a lower monthly payment under an FHA loan than versus a conventional loan, because you can see here now rates on an FHA loan, really you can go to 7.375 with no points. So just really important to something to keep in mind. Folks who have average credit, they're actually in a really strong position to buy, assuming they can come up with a 3.5% down, they can qualify, they can show income. But you would think that a borrower who's like has a 670 credit score, hey, you're going to get like kind of a bad mortgage deal. Not anymore. Like, and really not that they were before, but now it's even better. Like, they're going to get this subsidized mortgage insurance premium that went down. So this is lower than what the private mortgage insurance is. They're going to be able to put only 3.5% down. They're going to get a lower interest rate than conventional. And so it's a great opportunity to educate anybody who may think that they don't qualify or think that they need to improve their qualifications before they buy. Said, no, actually, you can qualify for a lower than average rate and this reduced mortgage insurance today. So I'm going to stop sharing there and see if just open it up if there's any questions about FHA loans and how to use this in marketing. All right, we're all FHA mortgage insurance experts at this point. So, pop quiz. What year did the mortgage insurance premium, Aaliyah, this is for you. When did the mortgage insurance premium decrease?
I'm so sorry. I have been doing 3 different things at once. Someone else is going to have to answer this question. I apologize.
All right, pop quiz. When did Michelle, when did mortgage?
2022. No, it was this year?
This year, February 2023.
Okay, thank you.
February 2023, mortgage insurance premiums were reduced. This is great content to include in your social media posting because I'm telling you, people don't know this. You know, if you were to take a poll of 100 people on the street and say, hey, did you know that FHA mortgage insurance premiums were reduced this year, making FHA loans much more affordable for home buyers? They'd be like, no, I did not know this. So this is where they really rely on us professionals. And I always feel like anytime there's like educational content that changes in the industry are always great opportunities to create educational content. And so this is a big change. Like I'm seeing this play out on a day-to-day business operation, like loans that would have gone conventional before February 22nd, 2023 are now going FHA and is making a difference to the number of loans closing. It's making a huge difference to those clients who are now qualifying because with FHA, you could actually go to a higher DTI. And so they might be able to buy a home that they would not have been able to buy before February 22nd. So just that one, think of that one client, this one change really changed their life because they're now able to qualify for the home that maybe they wanted, before that they would not have been able to qualify for before the change. So I will pause there. If there's any questions.
What is the current DTI on FHA right now? Is it
56.9%?
Okay.
So on conventional,
I just want to interject that sometimes listing agents will stray from or be leery of an FHA offer because of the appraisal policy where the appraisal value stays on that property for 6 months. So that if the appraisal came in low and the seller didn't want to take it, then they either have to drop that price to ever take another. If they're getting other FHA offers, they know they have to drop the price or they can't accept the offer because that appraisal value is still going to be there. And that's what I find to be the one and only derogatory thing about FHA offers.
So what do you do to try to get your client in the home?
Well, basically, I think that the appraisers are, as long as the appraiser was fair, what I do is tell them, well, this is an FHA offer, and yes, that's going to stick if we're ever going to take another FHA loan or offer. But I also try to let them know that this is what the market is telling you that the property is valued at. And even if we go back to the drawing board and you start all over again, then you still could get that same number from a conventional loan and or worse. So it's like, educate them on what their options are and how the transaction is going to play out if they don't lower the price or they can't come to terms with the buyer that made the FHA offer.
Yeah. I think that makes a lot of sense. And, like sometimes what I'll do is, I know this probably has limited impact, but I will usually write a letter, or even talk to the listing agent about the person's qualifications, about the thoroughness of the pre-approval, and maybe try to appeal at the emotional, element. If they're comparing, let's say, two offers, maybe the FHA one is higher. And again, this is where you can really educate me. But I try to do everything that I can in my power to be an advocate for my client from the mortgage side. So, and sometimes, maybe that client says, okay, I have to go with a conventional loan just to qualify this, even though FHA might be the more affordable product. That could be an option too. But it's good to have options and to have clients be aware and educated about what options exist. I find so often clients have no idea these options exist. Like that, oh, I can buy with 3.5% down. I can buy a 2-unit property with 3.5% down, and I can do this with a 680 credit score. Like, I didn't know that. So a lot of my content is focused on home buyer education. Just really try to educate home buyers about different loan products and how to use mortgages and real estate to achieve their financial goals. All right. Well, we're coming up to 1 p.m. It was an honor hosting the room. And if you have any questions, feel free to contact me directly. And I look forward to connecting next time. Absolutely. We host these rooms every Tuesday at the same time, 12:30 p.m. Pacific Standard Time. And so come back next week and we'll have a brand new topic ready to talk about. So I hope everyone has a great rest of their Tuesday, and we'll see you all again soon. Bye, everyone.